I found the cheat code to trading around 30 years ago, and I kept it to myself until around about now. For those of you who don't know me, I'm Rob. And for those of you who do know me, I'm still Rob, and it's Coffee with Rob. First thing I'm going to do, I'm going to take you down the charts. I'm going to show you a system that we use to trade with, and then I'm going to show you a strategy on how to make money, because the cheat code to trading is all in the strategy. It's not in the system. Charts can't make you money. Charts can't predict the future. You can't predict the future. Win rates don't make you money. The money is all made in a business plan and a strategy. Did you know that trading is 50-50? Every time you take a trade on the chart, you got a 50% chance of winning, and every time you take a trade on the chart, you've got a 50% chance of losing. Most of you won't agree with me. Most of you will have a problem with this. But once you understand the strategy, once you get the aha moment, once you realize what I'm talking about, then you'll understand everything. It was a long time ago when an old man like myself came to me and said, "Hey, Rob, by the way, you can't time the market." And I said, "What are you talking about? We're all traders, we're all trading. We need to time the market." "Of course we can time the market." I said, "No, you need time in the market. In other words, you need an investment account," which all disclaimers we have, that's not a problem. But if you can't time the market, how do you make money trading in leverage trading? How do you actually make a profit? And that's what I'm going to show you today. The aha moment came to me. I found out the cheat code, and I realized how you can make money if you can't time the market. Trading is risky. Trading is insanely risky. Most traders lose money. In fact, 75 to 95% of traders do lose money at any given time on leverage trading. And I know you think you're going to be part of the top 25 or 5% and you're always going to win at trading, but you're not. That's not going to happen. The fact remains that even though we tell you that 75% of traders lose, most people still get involved in trading because they believe they're going to win millions and millions and millions of dollars. And that's great. At least you're manifesting something positive. Let's go and have a look at the charts, and then we'll talk about the strategy. The cheat code to trading is not in the charts. In fact, nowhere even close to the charts. It's all in the strategy, but I will show you the system that we use on a regular basis on the charts. Interestingly enough, very straightforward. What we do is we trade three ways. We trade in the trend. This is a trend. You see this is a bearish trend. You see how it's moving up and down here, going up and down. Or we trade in the range. You see there's a range. There's a range. It's trading between the top and the bottom of that range. So you can trade in that range up and down, up and down, up and down. And also we counter trade. In other words, when it breaks to the upside, breaks down to the downside, or breaks out of a trend. That's a favorite trade of mine. That's what I like to do. I like to trade those trades. So this is Brent crude oil at the moment. The price will be different by the time you watch this video, but that doesn't matter as long as you can see what's going on. If this green candle breaks through that trend resistance, because that's on top, that's a resistance, it breaks through that and goes to the upside, then that becomes a long trade, and you've got confidence here because there is another trend resistance running across the top here. If it breaks through that as well, you've got double trouble. In other words, twice it's telling you to go long and go to the upside. But on that flip side, if you get the big red candle which drops to the downside and pushes it down, then you're looking at a short on this particular item. But I wouldn't go short on Brent at the moment. I'd rather be on the long side. United States dollar, South African rand, looking here, looking at this, you see, you're looking for areas of liquidity when it comes to system. Now remember, charts don't predict the future. You don't predict the future, and charts don't make you money. Win rates don't make you money. They just give you the ability to manage your trade, to decide and draw a line in the sand as to where you want to put your trade, long or short. Makes you feel comfortable when you're taking the trade. But what you're looking for is that liquidity. So here is the South African rand. This is hit resistance, 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 resistance. It's hit it a number of times. It keeps on hitting this resistance. What does that mean to you? What that should mean to you is there's a whole lot of orders or a whole lot of money lying in this general area. That's why you see us drawing rectangles quite often, because we make them a little bit bigger than the line, because trading isn't done on a straight line. Liquidity isn't in a straight line. But I draw an area of interest. This is an area of interest. If it gets to this area, it could come back because there's money there. But if it breaks out and breaks away from this area, what a fantastic long trade, because it's taking all that money and it's breaking to the upside. If it comes back down again, the money and the orders have pushed it back down again, and it stays within that range because you're trading in that range, up and down, up and down, up and down. That's how it goes. Let me take this out the way. So you've got this range that's constantly giving you the trade. If you look at this particular trade, the Euro United States dollar that we took, you can clearly see that you've got this bearish trend. Then we were looking at the long trade here, which would have been great, but it failed. It came back into the trend. So it's in a bearish trend, short trade in the bearish trend with a view to it coming back to its lower targets. And then you get the stop loss up there and you'll take profit further down to the downside. So pretty good trade, pretty good trade. You look at Bitcoin. Where's Bitcoin going? Bearish trade. So this thing is going down. So what you're looking at here is the possibility that you're going to get a short position. You're going to take a short trade with a target down somewhere down here and a stop loss up above that level. This is a very one-to-one trade, but you can take it if you want to. That doesn't look too bad. What do we do with the S&P 500? The S&P 500 looks like it's time to crash. But what we do here is we look at another short position. So what you do here is you take a short position and you say, well, stop loss much closer, because if it breaks through that level, it's gone, with a take profit somewhere down here. What a fantastic trade. Look at that. So you're taking the trade at this level with a stop loss really close by to the top here, with a view to making all of that green on the way down. Now, you don't have to get out and take your profit at this level. What you can do as well is say, well, it's bounced off the resistance, it's going down to this level, bring the stop loss down into profit and follow it down. Maybe it'll go all the way down to the lower levels here, whereas your main support is all the way down the bottom here. If you have a decent crash, you might actually make a bit of money out of something like that, and it might be quite decent to you. Gold, the banks have been buying the hell out of gold, and it's been going up at this point. By the time you get this, gold might be all the way down at zero. I don't know. There's a big crash going on in gold at the moment. So what you would be looking at here is instead of a long position, which it was, now you're actually looking at more towards another short position. Sorry, all the positions here are short today. I'd put my stop loss probably in that area, just above that prior high, because I know if the value, if it gets there, it's going long. And I'd actually target on this, not just that first level, but I'd actually target probably the second and third levels down to there, try and get some profit out of this particular trade. So this makes for a great short trade. I just wait for it to break through that support level with a nice red candle before taking the trade. Maybe just give it a little bit more to the downside there and grab it just below that level there. So that's kind of the systems that we use. The system's not going to make you money, guys. The systems are 50-50. There can be absolutely nothing on this chart. You don't need anything on this chart. You don't need any lines whatsoever to say, I think this is going down, I'm going to take a trade to the downside, and then simply manage the risk and manage the profit, and then follow my strategy, which I'm going to talk to you about right now, this second. Here we go, guys. Let's talk about the strategy. Now you know the system. Now you know how we work with charts. Let's talk about how we work with a strategy. How can we actually make money in the markets without any charts? If you had no charts whatsoever, what would you do? This is the question you have to ask yourself. Now, as I said earlier, an old man came along to me and said, Rob, you can't time the market. And I thought, well, I can't time the market. What am I going to do? Now, if you've ever started businesses, and I've had a couple, then you go through these processes of how much capital am I going to need in the market? How much money am I going to need? How am I going to make a profit? Where am I going to put my business? How much stock am I going to need? Am I going to need staff? And a whole range of questions. Now, you don't need a 1,000-page business plan, dudes, but you do need some kind of plan. You do need some kind of idea of what you're going to do. Let's be clear. I mean, if you don't know what you're going to do, how are you going to do it? You need to know. And this is where it comes in with trading. As so many people get involved in trading, they see trading, they see this fancy fandangle thing going on, they see a course, they see someone telling them that you can make millions, and Lamborghinis and Ferraris and blondes and all this kind of stuff floating around, and everybody's throwing off their money. And you think, oh, I've got to get involved in that, I've got to get involved in trading, not thinking that where in the world, where on earth do you take $1,000 and multiply it into $100,000 in 12 months? It doesn't happen. It can't happen. There is nowhere you can put your money, and that's going to happen. Yet you somehow believe that this is going to happen in the stock market. And you get involved and they tell you that if you win more trades than you lose, that you're going to win money. And that's how it goes. But that's not true, because charts can't predict the future. Win rates can't make you money. How can a win rate not make me money? Because I'm winning more trades than I'm losing. Surely I'm winning. No, not true, because so many people get involved. They start trading with a win rate. In other words, they win 7 trades. They win $10 on every trade. And then on the 8th trade, they lose $100. And they think, Why am I in a loss? What's going on here? Why did I do that? Because they had no plan, they had no stop loss, they had no profit target. In fact, they didn't even know what they were doing. They're just trading. Look at that. I won 7 trades out of 10. Go and boast about it. Go tell everybody how you won 7 trades out of 10. But actually, all you've done is lost money because you don't have a proper plan. And the plan is simple, and that is, it's so straightforward, guys. It's a 3-point plan, by the way. This is not like rocket science. It's the easiest thing in the world. And the plan is to make more money on your wins than you lose on your losses. To make more money on your wins than you lose on your losses. You'll notice I said that twice. You notice I double up on that? Because that's the only important factor in this business plan. But the problem is, how do you do this? How do you make it so that you make more money on your winning trades than you lose on your losing trades? Because most of you will get involved in trading and you'll just trade any old amount on every single trade, depending on how you feel about that trade. So you look at the trade and you say, I'll just trade that amount on that, and I'll trade 5 contracts on that, and I'll trade 10 contracts on that, and I'll trade 2 contracts on that. And it's just a mishmash of trades with different amounts and different values, and you have no idea how much you're winning. You have no idea how much you're losing. You're just taking a big fat chance on this. You have no idea which way you're going. What you need to do is this. Take an account size. Now, most people like myself have more than one brokerage account, have more than one account available to them to trade on. Split your money up into different places. Try not to put all your eggs in one basket. If you put all your eggs in one basket, like Humpty Dumpty, they'll probably fall and break. And then you end up with no basket whatsoever. That doesn't help you, does it? You need to have a split so that if you wake up on Monday morning and the broker's gone so long on all your fish, you've still got another 8 brokers or whatever the case. You don't need a lot of brokers, maybe 2 or 3, just to split your doshes, particularly if you've got a lot of money. If you don't have a lot of money, you need 1 broker. If you've got a lot of money, you need 2 or 3. Then what you do is you say, I'm going to keep that brokerage account the same size on my plan. It doesn't matter if it goes up or it goes down, it makes a profit, doesn't make a profit, if you take the profit out or if you leave the profit there. What you have to decide is what size is this brokerage account, and say, well, this is a $100,000 account, so this account will always be a $100,000 account until I consciously decide to change that amount. In other words, I work my whole plan around $100,000. That's my figure. Now I say I'm going to risk 1% on every single trade. Now the question comes in, how do I risk 1% on every single trade when I've got different stop losses? And this is the easy part. Now just remember, you can risk 2%, you can risk 10%, you can risk 0.5%. You choose your own balance, you find your balance, and you find where you're comfortable when it comes to losing, because the first thing you have to learn is you are going to lose half your trades or more. In fact, most people lose more than half their trades. Just a thing, because it's all in the psychology, it's all in the fear, it's all in the fear of missing out, it's all in the impatience of the human being. This is why you lose trading. You know, when you go and do a demo and you go and do the course, it all looks easy until you come home and you start losing and you wonder why you're losing. You're losing because of the psychology, you're losing because of the fear, you're losing because you're unable to sit on your hands and be patient, you're losing because of things like not being able to wait for the trades to come to you instead of chasing the trades, which most people do. Most people end up chasing the trades rather than waiting for the trades to come to you. So how do you handle the stop loss? How do you keep the stop loss the same on every single trade? Now, 1% of $100,000 is $1,000. Now you'll say, well, that's not a lot. That's not a big amount to risk. Yeah, but kind of imagine if you were risking more and things went pear-shaped, okay? If you lose 10 trades in a row, you lose $10,000 on 1%. If you lose 10 trades in a row on 10%, you lose, well, all your money. 1% it is then. Right, so you risk 1% on every single trade. How do I get that in? It's easy. All you do is you look at the trade. You say, that's the trade I want to take. I want that trade. That's the trade I want to take. Then you go and look for an area where you feel if the price was to get to that spot, then my trade would be completely invalid. I wouldn't want to take the trade there. That's the spot you're looking for. Then all you do is you work out how much is $1,000 back to my cost. You work the price out. You work out how many lots, how many contracts, whatever it is you're buying, back to the cost. Now you know the size of your trade. Now you know that your $1,000 trade, that's the size of your trade. And then you work out if you can make more on the win than you're losing. It doesn't have to be 2-1, it doesn't have to be 3-1, it doesn't have to be 4-1, but what it does have to be is either 1-1 or more than you're risking. It's insanity to be targeting $50 and risking $1,000. You need to be targeting more than $1,000. So if it can't reach that, if the chart doesn't look like it's not going to get there, then don't trade that. Then look for another trade. Just walk away and look for another trade. Look for the best trades. You see, most of my profits made with 1 or 2 trades. In other words, in a year, I get a couple of trades that make a fortune. They make a load of money. And then there's a whole bunch of trades that make target. And then 60% of the trades are small losses and small wins. Why is there small wins in there? Because the way you follow your trade up is you don't just take profit. You take your stop loss, you move it up to cost, and you move it into profit as you go, and you manage the trade. And that's how you're going to take your profits out of those trades. And then sometimes it comes back on the stop loss, takes out your profit and a very small profit, and then you make a small win. And that fits into the small wins. The whole mishmash of small wins and small losses, but keep the losses small, make the wins big. I mean, if you're risking $1,000 and you're making $4,000, isn't it somehow logical that somewhere down the line you're going to make some money? That's the whole point. For those of you who don't know me that well and haven't been around that long, don't forget to subscribe if you've watched the video this long. And while you're here, go down and join the members area. In the members area, I give you trade of the day every day. I'm thinking of putting maybe a course in there or something like that. We'll see how that goes. And also, we've got the Telegram channel, and I speak to you guys on a regular basis. So get involved in all that and be part of the club. Really important that you become part of the team. Come and join us on the live shows on Tuesday and Thursday, and we can discuss every live show. I put a little bit of trading out, generally technical trading, a little bit of trading on the charts and how to trade, and information that goes out there. And every single live show, I try and put it out for you guys and give you a little bit of value in the live show, not just me trading and making hundreds of thousands of dollars. I actually show you guys how to trade. It's kind of a lot better. And on that note, guys, thanks for watching the video. Don't forget to watch the last videos if you want to know more about trading. There's loads of information there. There's hundreds of videos. Enjoy them, lap them up, and learn about trading and make loads of money. Thanks for watching. Till the next time. Cheers, ciao, and bye.